Hello, everyone. We are Jolt Technologies, and this is our Year 13 earnings call, presented by myself, Sam Cernit, Lillian Rosenbaum, and Cesar Rivera.
Great. So starting out with our strategy, we've stayed fairly consistent over the course of the previous years. We started with the cost leadership strategy, and we've just kept on refining it. The main tenets of that strategy are offering high-quality, low PQ ratio products, obtaining substantial market share in order to achieve economies of scale, and trying to increase our margins by cutting costs in our value chain.
So this is our Year 13 results shown on this table. For our target EPS for Year 13, it was $10.50. Unfortunately, our actual EPS was $2.72 less than our target, landing us at $7.78. Our target ROE for Year 13 was 45%, and again, we were not able to meet that expectation. We fell short by 11.9%, landing us at 33.1%. Our stock price for Year 13 was $300. As you can see, we were not able to meet that target, and we fell short by $104.70, landing us at $195.30 for Year 13 stock price. For credit rating, we were able to maintain a credit rating of A, which we are very happy about, and we were able to exceed image rating by 3 points. So why do our numbers look like this? For the most part, Year 13 was a bad year for us, which is supported by the decrease in our profit margins, which fell by 0.3% from Year 12 to Year 13, which goes against a relatively linear growth. In order to maintain our low-cost strategy, we could only do so much with our prices for both drones and cameras, and in order to keep our desired market share. We found that any significant decreases or increases in prices ended up hurting our EPS and ROE, which we are trying to maximize. Even putting most of our money into stock buybacks did not help us reach our target. So overall, we did the best we could with the options that we had available to us.
Looking at our operating metrics, we have 4 that we have identified. These 4 are product features, marketing, dividends, and employee satisfaction. So looking at our product features, since Jolt Technologies does focus on bringing customers their money worth, we try to do this by giving every customer the opportunity to try and buy our products. And we do this by giving a low cost, but also having an average, both cameras and UVA drones, in order to give everybody almost the opportunity to purchase our cameras, and they don't have to get anything too fancy or too expensive, making it affordable for almost everyone. Looking at our marketing, Jolt Technologies still continues to pursue most of the market. We try to get as much market as we can. Even though we do have a low-cost product, we want to get our product out to everybody in the world, since it is something that I believe everybody can afford. Looking at our dividends, we were able to award our loyal shareholders dividends, and we were able to actually increase it to $2.75 per share, a 25% increase from Year 10. So it gives our shareholders a better dividend. And looking at our employee satisfaction, Jolt Technology tends to want to have employees satisfied the most we can, and we try to do this by trying to give employees no overtime labor for both our AAC cameras and also our UAV drones. And we do this in order to not keep them away from friends and loved ones, and as well as giving employees work compensation. When it comes to AC cameras, we are giving over $32,000 worth of workforce compensation, and looking at our UAV drones, we are giving over $38,000 worth of compensation.
So again, looking at our performance metrics from Year 12 to Year 13, they stayed pretty similar. This is very apparently because our sales revenue stayed almost the same, our net profit was almost identical, and our profit margins were identical. We weren't able to capitalize on any increase in demand. We weren't able to sell more units than we did the previous year, and our costs increased over this year too. So we weren't able to improve our metrics substantially.
Now moving over to the future of Jolt technology. So after some rocky years across the industry, Jolt has honed its strategy to reflect growth and new possibilities in year 14 and beyond. I'll talk a little bit more about that in a second, but we plan to grow and prosper in the following ways. So we plan to eliminate camera and drone R&D expenditures to increase margins, like we were talking about a little bit earlier. We also want to eliminate drone and camera retailer recruitment and support budget to increase these margins. We also want to increase compensation for our drone workforce to boost productivity and, of course, quality. Decreasing compensation for our camera workforce also will help these margins kind of fluctuate in our favor. Then we'd like to offer competitive discount rates to obtain those special contracts with our retailers. And we'd love to institute a large stock repurchase program. So this plan, while we are kind of cutting some things, it is consistent with our cost leadership strategy, and it does lead us to success. And we will continue to use all the market and participant data to ensure a bright future for Jolt Technologies. So next, moving into the year 14 projections, as you can see, we have projected already an EPS of $12.04, not quite hitting investor expectations, just like a few of our other metrics here. But we do hope this is consistent with their expectations and requests, though we recognize there are a few areas for improvement. Some positives in year 14 and over the past years too are credit rating, image rating, and net profit. So using all of this together and honing our strategy even more, we will continue to improve our metrics while stimulating growth in the other areas so we may continue to grow and offer the greatest product for our customers. Next, we will field your questions, and we just wanted to thank you for attending our year 14 earnings call for Jolt. So we hope this information helps you better understand our strategy and company goals. And next, Sam will now take any questions you might have. Thank you so much.